The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman, Tiger Technician Hour. My pleasure to be here. Following Steve Rose. And nice introductory music we had there. The Dow's down 8 and the S&P's down 3.5. The composite index is down 11. This is going to be a really interesting day. Yesterday was the start of this being an interesting day. And let's see what happens. Looking at the E-minis that I always show you here, there's do you remember the down channel I was talking about for about 3-4 days now? The down trend line, that trend line from 1978.25 that has cut, the price has cut into it for 3 days, but it hasn't really decisively closed above. Yesterday it closed a little bit above. Today it's now a little bit below. That's going to be very important. Why? Because if, in fact, there's a close somewhere around 1975, just a few points off the high, that would suggest that the 1978.25 will be tested and will be going to new recovery highs. My suspicion is, and this is the way for my subscribers I've been talking about in the last few days, and I'll show you in the Dow chart in a moment, my suspicion is that we've been seeing some rotational aspect here that is being forced. It is news-driven. It isn't necessarily market-driven. And as a result, there's a really good chance that we are in the process of making some short-term top right as we speak. Now, the E-mini 120-minute bar has really got 1978, we call it 1975, really. Between 1975, the low this morning was 1961.50, but I'm going to say between 1975 and 1968 to 65 support. A break under that, and the party could be over for a little while, just as a breather is taking place, and we'll go one step at a time. Let me get rid of this 120-minute chart. I'll put it in the corner here so you can still see it. So you've got 4 time frames right here as I run the numbers. So you've got the Dow INDU down 82. That was quick. Down 17, having gone to a new all-time high in leg D at 17,151. And I said today we would have, for my subscribers, now I can go to this chart that I wanted to show you. Look at this chart. It's so fascinating. And what I had spoken about yesterday to subscribers is that it would not surprise me if we have some kind of either a doji, but just a nominal new high today, and then we start to pull back into Friday. Well, look at this. The high of the 9th of June at 16,917, the Dow, took 9 sessions to go down to 16,703 and then to make a modest new all-time high at 16,978 on the 20th. Makes a little bit of a top there, pulls back, and 9 days again. It goes from 16,978 down to 16,746 to a modestly higher all-time high at 17,074 on the 3rd of July. 9 days. Pulls back, and what I typed in for my subscribers yesterday to my opening call, my very comprehensive look at the markets, is that tomorrow, that was what I said yesterday, Thursday will be day 9. Is it possible that we make a modest new high? We have a candle that represents some kind of a short-term top, and I even drew in the dashed line that says this would be the sub-channel that you'd be looking at if correct. We don't know. Even now, Dow down 25, S&P down 5.40. We don't know. But this is what I'm looking at because of the swoops of the stochastic and the MACD have been following the price really well. And that very often says, I've got price, strength, as long as I'm moving up. I've got price weakness as long as I'm moving down. There were no divergences. So how we close today and how the markets act and react tomorrow are going to be very important. Here's the 120-minute chart, made a leg F. This could turn into a peak F, and that'll be certainly the case if this little gap from the gap up of the 60 yesterday at 170.81. We're at 170.98 right now. If that gets even touched today, just below it, that's it. Pretty sure that could be a leg F going to a peak F in the 120-minute chart. And now look at this final one here. This is what I show my subscribers every day. Look at this. There is the 120-minute VIX index. It's in leg A as we speak. It did not go down to a new low. It went and didn't even hit yesterday's low of 10.49. So this says now we're seeing a little sign, just the first sign of internal strength in the volatility index. I have some other things that I'd shown my subscribers this morning. If I can get to it, I'll get to it. Let's just finish the numbers here. GCQ14, that is the gold contract, and that made a peak F in the Chapman wave from the low bar of the little doji candle that was on the 3rd of June at 1240.20, runs up to 1346.80, and now it's pulling back very sharply under the 200-period moving average, under the 9-period moving average, and it's suggesting that the pattern that I've been talking about for quite some time in gold, let me move this away here, look at the GLD. So for those of you looking at Tiger TV, the chart on the left is the daily. This is the weekly, and that's the monthly. And I've been showing you here the 120-minute chart, which went to peak A, B, C, C1, C2, and is pulling back. For the gold contract to actually change its character, it needs to really climb from the 1303 level it's at right now. In the next couple of days, above 1311, 1315, strong resistance. So now I'm going to go to the GLD. The GLD has made a peak F with an island reversal at 129.21. Now, this is the chart that I've been showing for months and months. Could be a year, in fact. That, yeah, it must be because this is July and we're in July. I had shown this way back that the H pattern can actually turn out to be a lowercase m pattern. So here we are. H goes to an M with a higher test of the left side low of 114.46. That should be good. So if the GLD, this is the Spider Gold Trust, is not able to break above 133.69, in, I'd say, July, it should be in July, but instead takes out the low of 119.42, that's the low of the week of the 6th of June, that'll say, be careful, good chance you're going to try to get close to the 114s. That was the left side low back in, I think it was December, January of 2013. And now let's do this. We're going to go to the dollar, which I had mentioned yesterday was looking really good. The weekly chart is improving a lot, but it's really the daily chart. Look at this. It's really the daily chart that says, I'm in leg C. If I can climb above in the index itself, above 80.58, I'm about to make a continuous leg C. But if I don't, it'll be a peak C, and there should still be a D. And it's a good sign. EUR-USD acting very poorly, making that H pattern to the downside. Looks like it wants to test the low of 1.350 back in the week of June the 6th. And now we're going to have a look at bonds. Now, I'd spoken about this yesterday as a very good sign, and that the TLT should get into the 114s. That's what I said to my subscribers. Lo and behold, we're trying to get back to this very strong, what was support, is now resistance, and that resistance is at 114.85 today. It'll be a little higher tomorrow, and this is brand new leg B. Oh my, this is very strong. So money, in fact, over the next couple of days, Dow's down 50, S&P's down 8.90 right now. I should just mention for disclosure that we are short the S&P. We've been short for 2 days. And the bonds will break out. If bonds go above 115.19, the TLT that is, goes above 115.19, the high of the week of May the 30th, that'll be very positive and start leg B in the monthly chart. Can't believe that. In the 120-minute chart, this is only leg B up. Oh, this is going to be what an interesting session we've got here. So, and just as we're speaking, so I had a couple of email questions. Let's just do this. They were very interesting. In the Chapman methodology, what you look for is a leg D going to a peak D before you short. Now, sometimes I anticipate it because I do that based on the 120-minute chart. But in this particular instance, what I was looking at is waiting for a particular stock. I had a call from Kathy in Cambridge, SNDK, about not a month ago, but about 3 weeks ago. Yeah, right on the day that or day after that SanDisk had made a round number high. So let me find that round number high of 104. It disappeared. All right, well, it was there because we discussed it. And was it here? 104. I'll find it. All right. So the 104 said to us that if, in fact, there was a break above that level of 104 by even there it is, by 1 penny, you got to cover any short. So maybe it was a half a point, 50 cents or something was the stop for her, and we got taken out. She got taken out. And in fact, what it did is it went to peak A, B, C, pulls back, made it the technique I call the Roman candle. It went below, but then it suddenly soared to 108.77 yesterday. I like to get peak D in place. Didn't have a chance. This morning must have had bad news. It is down 13 points at 94.82, down 12%. Peak D in the daily. There are so many charts that are doing this. We're going to be watching it real closely. Leg F in the weekly, which could turn into a peak F if all of next week there is no high above 108.77. And leg D in the monthly. I'm just seeing too many of these stocks. Yes, there's a rotational correction that actually is underway as we speak. But I can't believe that there are so many stocks that I'm looking at that are starting off in their dailies, going to a D or an E, and are highly vulnerable to a pullback here, and that'll start triggering their weeklies, and then maybe, I'm just saying maybe, their monthlies. So I'm a little cautious. I said that yesterday as we were wrapping up. I said I'm getting kind of nervous. So let's look at this. TRW comes out with some news today, spikes up in leg F. The MACD and stochastic are still good, but look at that vertical move in the weekly. Leg E, TRW Automotive, TRW trading at 103.68, up 2.48. Got to be a little cautious here. Let's look at Microsoft, MSFT, Microsoft. Then I'll get to the questions about Netflix that I have. TRW is a buyout. All right, well, good for TRW. Oh, man, isn't that interesting? All right, folks, and Microsoft has spiked today. I'll be back. Basil Chapman, Tiger Technicians out. Guys down 38, S&P's down 7.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rose, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman. We are back, and the Dow's down 45, S&P's down 8 on this July the 17th. Now, what we're looking at is Netflix. I had a question. What was the question? Hi, Basil. Would you please comment on Netflix? I have a Chapman Wave D on daily, but I can't tell if I have a Chapman Wave dreaded H or a Chapman Wave falling X. It is under the 9 EMA. Does that signal a Chapman Wave dreaded H? I get confused between these patterns. We'll listen to your show as always. Great. Thanks for all you do. Chris. Okay. So this is what I'm looking at here. There's basically what we can call, this is a pattern that I was talking, I can't remember who called just a couple of days ago. We were looking at this and I said, that was when there was a test of the low on the 10th or the 11th. What I'd said is there's a chance there could be a bit of a bounce, and that bounce could make, and I'm going to type it in here. So let's call this LS, that's the left side or the left shoulder. This is the head. And this is the right shoulder right there. And I said there was a chance that Microsoft trading at Netflix, trading at 443.52, down 92 cents, could in fact be making the pattern that I like least of all, and that's called the head and shoulders pattern. Why do I like it least of all? Because in my work, I need to identify it via other means. For instance, right here, I never drew it before, but I should have drawn in the Chapman wave stalk leg formation. And that says there's a very strong move to the upside, and then it goes sideways for a while. In fact, I should even extend it out to there. And then there's a sideways move for a while, makes kind of an oval pattern, and that's the body. And then it breaks out, the neck goes up above the body high, in this case the high of 450.82. It makes the neck formation. Sometimes there's no head at all. It just comes immediately down. Sometimes it stalls there for a moment, and it makes the head. And then this particular pattern says that when it pulls back in what I call the beak, look, there's the leg, there's the body, there's the neck, there's the head, and here's the beak. The beak should come into at least the body. So that would be under 450.82. What does it do? It goes down to 428.20, has a bit of a bounce. Now the question is this the falling axe formation, or is this the H formation? So I grab the high and the candle that made the low, and I draw in the lowercase h. I don't care exactly where it is on either side. I just want the pattern that says you're rolling over, and the high of 455.48 was a high of 455.70, so that becomes B. It's still B, but it could in fact turn out to be a B minus if it goes much lower than this. So the question is, and this is a great question, is this the pattern, the lowercase h pattern? There's the back of the H, there's the arch formation that is going to test the left side low of 428.20 made on the 10th of July, or go under it. So here's the answer, and here's the other question. Or is this a falling axe formation? Well, up until yesterday, I would have drawn in, and I talk about these as fighting. So in the Chapman wave CD, introducing the Chapman wave methodology, the H pattern, it comes under the aegis of chapter 17, slide 332, and the falling axe pattern, which is just really a wedge that's either rising or declining, is chapter 24, slide 391. And I talk about these as a fighting pattern. The one says you're going back down, and the other says that if you break to the upside, that's very positive. But it joins, they become co-conspirators together. They are very negative if, in fact, the trend line gets broken. Unfortunately, we've only got one price point here for the trend line. But this is a confirmation of the falling X breakout to the downside. So the answer is this is yes. Chris, this is an upside down falling X, which is a negative pattern, not a positive pattern. And the other thing is, you see, over here, we could have maybe drawn one in. This I drew it is not 100% accurate, but let's just say I drew it in like that, and I drew it in like that. That would be a rising wedge from a falling axe formation where the cone is declining, but you want to use that for a 1-to-1 on the upside. Here it's going to be like a 1-to-1 on the downside. So everything about Microsoft right now says there is weakness, but with the Dow, down 58 and the S&P down 10.80, it's saying be careful. Because it is showing some strength. However, when you look closer, look at the MACD and the slow stochastic. Those are very poor. So, and I mentioned this the other day that my suspicion was that Microsoft would in fact be pulling back and retesting those lows. So the answer is leg /B. And I said, great that it made a new recovery high. I can put it a D /B in the weekly. No technical problems there. And F in monthly. Folks, you got to... There's just too many things happening. We'll be back with John and Philly straight off this break. Stay tuned.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Folks, we're back, and this news about Ukrainian jet having come down. Leighton jet had 295. Oh, I mean, that's just really terrible. Okay, let's get back. We've got John and Philly. Hi, John. How are you?
Basil, hi. That is terrible news.
Very bad.
It's always unfortunate. Hot wars. Wanted to ask you about a Chapman wave rule technique. I am probing on the short side, speculating the NDX index and its futures contract, the NQU4, that'd be the September futures.
And would you be looking at the daily and the shorter term?
Yes, and have already put on position, and so I'm short from a little bit higher. And of course, we don't have any proof any rally has completed or turned down at this point.
Right.
What I wanted to ask you, on the NQ futures, if you could pull up the 30-minute charts.
30-minute chart, okay.
What I wanted to share an observation, then ask a question. On Wednesday, the NQ futures made a high at 39.41 and then declined into, it was like 6 or 7 a.m. this morning to a low of 38.94. And the Chapman wave count that I get on that 30-minute chart is trough G/C. And you've always mentioned the Chapman wave rule that G is your highest alpha labeling.
Correct.
And
yep.
If you get something after that, it's not going to be an H; it would be a recycle. Now, the question is this: we fell into that 38.94 low that you're showing, and then bounced strongly up to 39.27 and has come back and taken that out to a low of 38.88. My question,
oh, good question. Yes. What's the count?
my question is would this be a trough D, or would you label it a new trough A, an entirely new pattern?
Okay. So, folks, this is a really good question because within the rules of the Chapman wave methodology, over the years, slight variations have come about, but they become rules by themselves, and I do not like to break the rule. It has to fit, otherwise you are just making things up. You're form-fitting. What's the point of any technique if you're going to form-fit? Well, what I would do is this. I don't know if I'm just not quite set up to, I had it before, but I've had to stop it for at least a couple of days now to be able to just automatically go ABCD like that very quickly instead of keep going on click, click, click. But let me just explain to you. First of all, you know that the bar that made the high cannot be the low, and that's the bar at 10 o'clock on the 16th. They went to the high of 39.41 and had a low of 39.28 because you have to wait for a peak to be made, and that's the very next bar in the 30-minute chart. So now we got the count. We go A, B. Let me do this. So that's C, and then you get a D. And it's almost as if you would have an instant restart, but you can't because it went too high, that very next bar. So I agree with you. So it goes down to a G. Everything looks perfect because you get your doji candle. It's a long-legged doji candle, which often has to be retested. Lo and behold, it gets tested twice. And that's from the low of 38.94. And then you get that spike to the upside. The most important thing is without even doing a wave count, I would automatically go A minus. That's the one that I call the single leg A. It's the single leg A syndrome. Why? Because when you get to identify it enough times over a period of, once you've found that there's a particular move that can happen in the futures, and it can happen in stock as well, but especially in the futures, that often happens right at the bell at 8:30 when there's an economic news report. It's maybe, or when at 2 o'clock or 2:15 or 2:30 when the Fed comes out with its announcement, and then maybe there's a news conference or whatever there is, there's that single leg up that spirals to the upside. And the next thing you know, it's coming back down, and it's what I call the Eiffel Tower. It looks just like an uppercase letter A. It goes straight up and straight down, almost very often in the same amount of time up and same amount of time down. In this case, it's even quicker. Now, because there's news related to this sell-off, because there must have been a lot of nervousness in the market. As I was speaking, we saw the Dow went from about a +9 to a -9, and then -20, and then all of a sudden it was down -40. So in this particular instance, I would say to you that this is now a brand new leg A to the downside, number one. And it's possible once in a while that you just get this isolated move. Now, let me explain it even clearer. Sometimes you get a spike to the upside, a pullback, but in fact, the market was ready to turn. It is the news to the downside that aborted the rally, and then a new rally forms, and what you're left with is like a trough A and a trough B, and suddenly you've got a brand new buy mode, and you say, hey, wait a minute, I had all these beautiful A to B to C to D to E to F, maybe even to G, and now I can do nothing else but count it as like a single leg A to the downside, a little lowercase a or a B. All I can say to you is you've got to treat this now as absolute fresh material. So I'm answering your question by saying it was a rally that was aborted. It went underneath the left side low of 730 this morning. And now you're going to find, and I'll show you what I'm going to draw. Almost always I'll either draw in a rectangle, but most of the time I'll draw either a rectangle or an arch, and most of the time I will put in the arch. And that's saying to me there will be a retest of the low that was made. If there is no second bar with strength that goes to A, pulls back, and then goes to B. That's really what you need now. That'll be 3 to 4 candles. And on the fourth candle, you should be making leg B and go to a significant moving average. In this case, it'll be the 200-period exponential moving average of 39.11. That's really the upside target. My suspicion, and normally you would see me do this automatically as I'm speaking. I'd be drawing this. I'd just come in here and I'd say, where is the key support? Where is it? What was former support, which is now resistance? And I'd look to the left side and I'd say, okay, you've got the candle that broke down to 39.10.25. It's a candle at 7 o'clock this morning. Then you got the little candle wick high of 39.10. So that's the area, as I said before, around about the 39.10 to 11, 39.11 area. That's what's needed to be able to spiral back to the upside. So, and here's another thing. You see that the move that was made in the NQU, this is the E-mini NASDAQ 100 September 2014 future contract. You see that the MACD, the red line barely budged. It's still higher than it was before at the low at 7 o'clock or 7:30. And the stochastic is also. So I have to give a little room for some wiggling to say the market was looking like it wanted to head down. It was the move down was exacerbated by this news that came across the wires. In another, it's a 30-minute bar. I would give you maybe 5 minutes to 10 minutes before noon. I'm suspecting that by noon we will know whether or not there was so much energy to the upside that this is just merely an aberration to the downside because it'll be trading at the 39.11-ish area, or whether in fact it was headed on the downside and the move up was an aberration. My suspicion is the move up was an aberration. But that's just a suspicion, and we need technical verification. And the technical verification is if the NQU in the daily chart closes today underneath the 9-period exponential moving average of 38.93, especially if it closes decisively lower, that'll be saying, uh-oh, be careful. This is a peak E in the daily chart. And so that'll be D, E, and that's a peak F that was made that moved at noon on the 16th yesterday. That is a peak F in the 120-minute chart.
Yes, very good. Basil, that is very thorough. You answered everything I asked for, so I appreciate it, and I'll say good trading to you today.
Thank you very much for calling. Always appreciate your insightful questions. And that was John in Philly. And I also had a question in the den. Would I look at Ford? I can't remember if I finished the Netflix. I think I did. But Ford is in leg C right now. As I'm counting it, it's trading at 17.93, up 13 cents, up 0.73%. Looking very good. This is actually one of our stocks in my opening call. And and what I was looking for is a test of the 1802 in the weekly chart. I drew this a long time ago. It has another technique in the Chapman wave. It has the inside track, that dashed pink line. It has the left side, right side price time target line. It has the plumb line, which in this particular case is not the mathematical exact high to the low to the right side. I had to choose a different bar, but I drew this quite some time ago, and that bar very often is dictated by the inside wedge right side target, and that took you to today in the weekly chart this week. to get to 18.02. I'll be right back. I think I'll be right back. Let me just see if there's any problem here, but I'll keep talking. So 1802 is the left side high bar of the week of the 25th of October. And in this particular instance, what we're looking at is I was expecting 1802 to be tested this week. And lo and behold, today we went to 1808. So this is one of those techniques. Not all of them work, of course. Sometimes they work fantastically, and sometimes they give you the idea of what you're looking at. In this particular instance, it worked out perfectly, and it's leg E. Now, if I'm correct that this is only C in the daily, I'm not sure what's going to take it to D if, in fact, we're making some kind of a top. And that's the reason why I'm looking at this and I'm saying there is enough evidence at this particular point to suggest that we are still in the rotational aspect. There are still a couple of stocks left that have inner strength, but now there are many, many more that are starting to break down. Now, the other thing is this. In the monthly chart of Ford, 1802 was the target because 1803 starts that elusive leg D, and finally we've got leg D. But leg G, unusual, but it went to a G back in 1897, and that was in 2011, January. And look how the MACD was still strong. Stochastic was suggesting, uh-oh, be careful. We could come down very sharply. Now, this is fantastic stock. You remember the late Ed Young, one of our wonderful Tiger hosts here at TFNN, before he passed away, had mentioned Ford at 1. And he was buying it in the ones. And it was a spectacular move. Went all the way to almost 19. Now, I'm going to suggest this, that Ford has got a niche right now. That everywhere I look and I say, hey, nice looking. Oh, it's the Ford. Oh, nice looking. Oh, nice. I like the Ford lineup. In fact, I like it somewhat more than the General Motors lineup, although General Motors seems to have a broader spectrum. But at the same time, I think, and then in the den, Pete Heat says, Ford taking market share from General Motors, just a guess, since Ford cars do not explode. I think Ford has got a little bit more viability because of the manner in which they've been dealing with things. I don't like the fact that their system, what is it, Ford, My Ford or something, that joins all the electronics for your iPad or whatever it is that you want to have, and your cell phone, that there's still a problem, evidently. I've not been in one, so I don't know. But I like the look. I like everything about it. I'm suspecting that Ford is just really coming on much stronger. And when you heard today, AN, which is AutoNation, talking about how many cars are involved in their sales. Yep, and AutoNation. Now, this is another thing that makes me a little nervous. Look, leg F, leg E, leg peak D in the daily at 7 on the 14th, 4 days ago, and plop down 7.5%, down 4.67 at 56 after making an all-time high at 61.29. All these things are just saying to me, be a little careful here, because it's going to be sudden drops that really knocked the socks off some of these stocks. And this has been a fantastic stock. So we'll be back. Got a break coming up, folks. Dow's down 50, S&P's down at 10. And I had one more question. UNG. As looks like UNG, oh, not a good chart. That lowercase m pattern. And also, I want to go back and we'll look at that. Right back. Stay tuned.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Let me just finish my thoughts there. So, Ordination, I can't remember his name. He is really outstanding, and I've been listening to him for every quarter it comes on, and it's just really interesting. He's talking about 16 to 17 million cars, so that should benefit Ford. Number one. Number two is he runs a great show. A great ship. He has his different the different venues, the different areas that he's in, the different car selections, and he has a real good feel for what's going on. But he's also talking about trying to get ahead in terms of his internet activity for Ordination, and a big outlay he's making in terms of money, and that's really what's affecting the stock right now. So I'm looking at it and I'm saying, okay, fine. Yesterday we had a call, we were talking about CarMax, KMX, and I said it was holding very well, but you've got to be a little careful because if it starts to pull back, and I gave the numbers, that's going to be, you could take a little bit off because that's the action that it's got right now, weekly is excellent, monthly is excellent, but the daily is saying, hey, be careful, I'm the rudder, and if I start to lead and I start to pull back underneath the 51 support, 51 to 50, more intermediate term, you've got to be careful because 49.87 could be a target to the downside. So that's CarMax, same sort of thing. So what I'm really looking at here is the question came up as to, would I look at something like a GMCR? Yeah, GMCR is Keurig, what is the full title? Keurig Green Mountain. You remember Green Mountain just went soaring to the upside. Also looking a little toppy here. That weekly chart says, hey, I'm rolling over, so be careful. I'm at 118.85. GMCR. If I start to break 110 to 109 support, I could go into that ugly candle in the rectangle formation. No big deal. But big deal enough to go down to the 90 to the 90s, 15-17% correction. So you got to watch that real closely, and it's daily suggesting. So that's that. Now the other thing is UNG. I wanted to show this pattern. Remember I was talking about the H that goes to an M pattern. Be careful if the left side low bar breaks down. We have the same thing in the monthly charts of gold and the GLD. There it is. That's the 1-to-1. UNG is United States Natural Gas Fund. A 1-to-1 says that it could quite easily get to 21.88. It could get to 20.87. It could even test the 19.47 area if this continues, because the monthly chart is trying to do the same sort of thing. All right, we're going to be wrapping up. And before we go any further, let me just say we've got great programming all day. Stay tuned. But I wanted to just show you that the volatility index, I mentioned earlier, it's the first time that we had seen signs of new highs in the Dow, but the volatility index made a double bottom at 10.28. The VIX index made a double bottom a week ago. Where is it? A double bottom with the 1034. Oh, it was a 120-minute chart. Okay, so in this particular instance, it did not take out the 10.28 low, and in fact, it's gone very strongly to the upside. I'm suggesting to you that once again, as I've done for years and years here, keep your eye on the prize, and that's called VIX, the volatility index. If on Friday the volatility index closes above the last week's high, or close to 13.23, that will be suggestive to me that the rollover is going to be quite significant and take people by surprise. Yesterday, day before, a lot of people were forced into the market. I could feel it by the activity, even this morning. So be careful, folks. We've got programming here. We've got Daryl Martin at 1 o'clock, Dave White at 2 o'clock, Tom O'Brien Show, 4 to 6. Have a great day, and I'll see you back here. Don't forget, check out my opening call. Right at this particular point, we will be adding, if in the next 2 minutes, the Dow stays anywhere near here, we'll be adding to our short positions. We'll be watching that very closely. Stay tuned later this afternoon.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.